Welcome to the Women in Wealth podcast, brought to you by Regina McCann HESS, a certified financial planner with over 2 decades of experience. This show is for professional women who want guidance in working towards their retirement vision in learning, building, planning, striving for your dreams, and putting the work in now so that you can pursue your financial independence.
Hello, this is Regina McCann HESS, president of Forge Wealth Management, and welcome to our Women in Wealth series. Today, we're going to talk about tidying up our financial clutter. Yes, you heard it. We're going to talk about your clutter, but not the clutter in your basement. Well, although there could be financial clutter in your basement, but the kind of clutter that you collect along the way with all the statements or the old statements that could have come in, because a lot of times people use the digital statements now. But there's a lot of us who still like that paper, right? We love those stacks of paper coming in, the bills and everything else. And if you're anything like me, you do have a little pile, what we call the slush pile for that kind of stuff. And what we're going to talk about is how to get rid of some of that or thin it out just to make it a little bit easier for the person who has to come in and clean it up after you. So some of us do still get some joy in keeping those old statements. You do need to still keep some of those things like your tax returns for like 7 years, things like that. But do you really need your utility bills for 7 years? Probably not. So let's dig in here. So we talk about, there's people who have shows about clutter and how to clean up your house of clutter. And it's just the junk that you accumulate over the years. And we're just talking about the financial documents that you're accumulating, whether or not it's in your closet, in your desk, on your desk, in your bookcase, wherever you keep it, all those statements as they come in, you have them somewhere in your house, right? They could be in the desktop, the drawers are full with old paper. There's no rhyme or reason to it, but you do feel sometimes like a little bit disorganized because your financial papers might be all over the place. And this is worthy of maybe a decluttering project as much as cleaning out a messy basement. And yes, you can do both, but like take it a little bit at a time. Whenever you're starting a big, project, you don't want to say, okay, well, I'm going to do it all today. Maybe you just start simple. You say, okay, well, I'm going to spend an hour today on this project. And then I'm going to need another hour tomorrow and then an hour over the weekend. And then eventually you get it taken care of bit by bit by bit. So not anything you have to sit down and do one fell swoop, because sometimes that's a little overwhelming. And that's how we say, we're going to do it, but then we wind up not doing it because then that task becomes so monumental that we scare ourselves out of it. So this way you can take your time to say goodbye to some paperwork that you may not need anymore, like some of that financial stuff, and get a little tidied back up. So what do you need, right? You have to figure out what do you need before you can think about what can I get rid of? Obviously, bills that are in envelopes that you've, paid a couple years ago, we don't need them unless they have a relation to your tax return or something else important. How about those MAC receipts? If you're from my area, it's called a MAC receipt. Most other people call it an ATM receipt. It's from growing up in Philly. So those ATM receipts, you really don't need them. You check with your bank, you can log onto your bank at the same time and make sure you can see it right there. Then you can shred it. If you have to hold on to a receipt from a store to make sure you're keeping the purchase, obviously you're going to do that until you can't return, which is usually 30 days. Some stores are a little bit longer than that. But then yes, you have to keep the receipt until then. But after that, if you don't need it for tax time, get rid of it. Or if it's a proof of purchase for value of, like if you're insuring something, you do need to keep it at that point. But you can scan it in and create a file on your computer so that you don't have to have that paper all over your house. Obviously, if you also need it for a tax deduction, something like that, you want to, again, scan it in, hold on to it for probably about 3 years, and then shred it. And we always do recommend shredding. Obviously, there's people out there who have bad intentions and can go through your recycling, can go through your trash. And if they find account numbers for anything, they can just find ways to wreak havoc or something like that by having access to that information. So we do always recommend that you shred where you can. Okay, so let's talk about things to keep, things to toss. How about your medical bills? You're getting all these receipts from the things that, doctor's visits and tests and lab work and things that you've went to in the past year. Once that claim's been paid, you don't really need to keep them any longer, unless, of course, you're at the point where you're going to have the ability to deduct the medical expenses on your tax return. Then you want to kind of just go to the IRS website, which is irs.gov, and look up those guidelines for how to keep those documents. Obviously, paper, again, not the best option. I would scan anything that you have into your computer just because it technically could last longer than a piece of paper, because I have seen receipts that, looked good when I got them and then the ink literally faded. So I don't even know what the receipt was for. Yes, I am guilty of financial clutter as well. This is really for me also to get my act together and do my annual decluttering as well, because I get those piles, believe me. I'm just as guilty as everyone else. But let's move on to the next item on our list, which is utility bills. Do you really need to keep your utility bills? Usually no. Once you pay the bill, you can pretty much, shred that sucker up, get rid of it. Now, if you are thinking about selling your home and you think the, potential buyer may want a year's worth of receipts or your utility bills, that's fine. You can save them for a year. Again, just scan them and shred them. That would be the only time I would say you may need your utility bills for disclosing what the approximate utility bills are for the house. How about major loans and any kind of insurance policies? Now, these are important papers. So you want to keep these along with, any other identification papers like your marriage license, your social security card, your passport, your birth certificates. Those are really important pieces of papers. They should not be on your desk anywhere. They should be in a firebox, a locked box, some kind of safety box where no one can just walk in your house and take them, but someone who is close to you and could help you with that may know where they are in case something happens to you. A lot of people keep them in fireboxes in their homes. Some people keep them in safe deposit boxes at the bank. Either way, those types of things you really, really want to keep under lock and key. And those are things you do need to keep, in your house somewhere. Now, should you carry around your social security card with you? No, definitely not. That is also something you should not give out unless the person absolutely positively needs it. And I am a big one for telling medical practices, no, they do not need my social security number, because the most times I've gotten identity theft is from medical offices, because they apparently have gotten hacked many times. At least that's my experience. So don't give them your social security number. They don't need it. Okay, so let's talk about other important documents are your annual tax returns. And of course, the supporting documents that come with it, like the W-2s, any other kind of receipt for your tax return that you have to hand to your attorney. You want to keep the most recent 3 years in your folders, but also, there is the caveat that you could be audited for up to 7 years. So I think maybe 7 years might be the better, play on that. So not just the tax return, but any kind of supporting information like the W-2, 1099s, whatever you get in the mail at the beginning of the new year, all those tax forms, you want to keep copies of those as well. Again, does not need to be in paper form. When they come in, you can scan them into your computer, keep a folder, tax year 2026. Just scan it right to that folder, and that way you have it for the next year's tax return information, or tax year 2025 for last year's tax return information. Separate them by year, have them. That way you know where to go look for them in case you ever need them. Okay, pay stubs, same thing. Until you get your W-2, you may want to hold on to the last couple pay stubs until you get your W-2 for the year. Also, sometimes I say, don't get rid, I usually keep within our house, if we have 1 or 2 pay stubs, the most recent ones we just replace, and usually just keep the most recent 2, get rid of the other ones. In case you ever go for some kind of loan, you have to prove your income, and they're usually asking for I don't know, anywhere from 2 to 4 pay stubs. So that's another time when you're anticipating going for a loan, like a car or a new credit card or something like that. Now, they may not want pay stubs for that. It may be more like a bigger loan who's going to ask you for pay stubs. But if you think you are going for any kind of loan, that's probably when you want to hold on to the pay stubs. And again, just a couple weeks is usually good enough. And then, of course, at the end of the year, when in the new year, like January, February, your W-2s should come in for the previous year. So they should be in your pocket already, and any pay stubs for 2025 should be shredded by now. Okay, how about property records that show improvements to your home? So we know that we have a federal capital gain tax, but we get a big chunk of money that we can write off as far as capital gain for federal taxes. But that doesn't mean that we may not still need to prove that we also put money into the home, so that could raise our cost basis. So anytime you're doing a home improvement project, you want to keep those receipts and invoices. If you hire people, you want to keep the invoices. If you've done it yourself, you want to keep the sales receipts from the, Home Depots, the Lowe's, all those stores where you're getting all your materials from. You want to keep all those and put that in a home file or a tax file or something, so that you know how much you spent on home improvements that year, so that you can add it to the expense of the home when you go to sell it. That really is going to come into play if you get into a situation where you have had the home for many, many years, and the house value has gone up quite considerably. You're really going to want to keep track of how much you spent to improve the home to help you with that cost basis aspect of thinking about the long-term gains that you could potentially accrue on that sale. So those are big things that sometimes people just forget about. How about bank statements? Do you really need to keep 10 years of bank statements? No, maybe at the most 1 year. I don't even know if you need a full year of bank statements. I know usually when I'm doing some type of financial planning for clients, depending on what I'm using them for, I may ask for 6 months worth of statements. This is assuming plain vanilla, everything's kind of similar, throughout the year, but 6 months of a credit card, 6 months of bank statements usually give me a really good idea of what is going on and where the spending is and where the income is and things like that. So at most you can keep them for a year. But again, these are things that you can pretty much get online, save them as a PDF. So less paper in your house. There you go. Investing documents, pretty much, similar. Do you need every single statement for the past, year? Not really sure, because it really depends on where your statements are from, because a lot of financial statements have all that information on each statement. But you do want to keep any kind of tax reports, any annual tax reports, capital gains reports, anything like that for your investment statements. I would recommend keeping them from anywhere from 3 to 7 years, because again, it's usually about 3 years, but if you're audited, they can go back to 7 years. So any kind of investing tax reports, you definitely want to hold on to for, a little bit longer than you would anything else. Let's talk about the next thing, a shredder. If you don't have one, invest in one. It is, I don't know, $50, $100. I have one. It's a crosscut shredder. Use it pretty much every day. A good quality paper shredder is one that you can have at your home. It's key when you're getting rid of any kind of old documents, anything that's going to have your information on it, whether or not it's an old credit card number, an address, a birth date, a social security number, whatever it is. Like if there's a question mark around, should I shred this or should I just, kind of throw it away or recycle it? If you're even questioning it, just put it in the shredder. It's only going to be a little extra step to protect you from the bad guys getting your personal information. And just every little step that you can do to protect yourself, I think is worth it. And then you can even just create a pile on top of your shredder. And then once a week, just have fun throwing stuff into the shredder. It depends on how much you like shredding. When things come in the mail or whatever, you bring stuff in. If it's not something that you want other people to see, throw it in that shredder and get rid of it. There are, some ways that you can have some filing systems where you can, if you still want paper filing systems, you could create a binder, categorize and label the binder, things like that. or put it in, a filing cabinet that way if you're into that. But again, when you're done with it, like in other words, if you are one to keep 1 year's worth of bank statements, if it's February now, 2026, then you want to go pull the February 2025 documents or bank statements or credit card statements out of your files from last year so that you're rotating that stuff out on a normal basis so that, 3-5 years from now, you don't come into your filing cabinet and you're like, holy Moses, they multiplied. What happened? So that's no fun to have to, go through all that at one time. Now, I've talked a lot about just mentioning scanning stuff, and a lot of times people can get their statements now through a PDF. They don't even have to get the snail mail anymore. But if you haven't thought about switching to digital, this is actually a good thing to do. There are also some concerns about it, but for the most part, switching to digital keeps things a little bit more organized, less stuff around the house. Can stop some of those problems. Almost any financial institution is going to do a paper-free option for you. Matter of fact, they encourage you to do the paper-free option and do electronic instead, paperless delivery, because it saves them money. They don't have to print a statement. They don't have to mail it. Things like that. And it also helps you decrease some of the physical clutter that's around your house. So it's kind of a win-win for everyone. And you avoid that big pile in your desk. Now, it could create a clog in your computer, a little bit messy situation in your computer if you're not organized. So you can create different folders in your computer. You can just be like, oh, bills, the 2026 bills. You put all the bills in there. Or you can separate everything, utility, healthcare, whatever it is, you could do it that way, or just make it so that it's, all your bills from 2026 are in this one folder. And as they come in, you just scan them in, utility bill, Pico bill, AT&T bill, whatever it is, internet bill, whatever it is. And then the date, February 2026, save it. So those are good ways to do it. So the one negative thing about digital is that it used to be for people when something happens and your loved ones come afterwards and clean up your house and they're, your executor, they would find the old statements and they would know where things were by the old statements. But a lot of times people don't have the statements. The younger people generally don't have the statements. Some of the older people still do have the paper statements, but there's still things that are online. And that does create a problem if you don't leave your passwords or somebody doesn't know where all your accounts are. They don't know how to access that stuff to help through the situation of, the final details that they need to make for you. Or if you're just sick in the hospital and somebody has to, pull their POA, power of attorney, and say, hey, I need to pay bills for mom or dad. And, I don't know where anything is because they don't have statements and, it's all digital. So that does become an issue. So what I do recommend for people is if you have assigned a power of attorney or if you have assigned somebody as your executor for your will, I do recommend that you talk to them about that. First of all, hey, are you okay with this? Because it is a big job. It is not for the faint of heart. It is a lot of work. So you want to make sure that person knows that you're asking them to do that and that they agree to do it. But also you need to communicate to them that, hey, here's my list of passwords. Here are all the, statements that you're going to have to look into. And here's where I keep that list of passwords. It's not where everybody who comes in the house can see it. However, it is listed or it is put somewhere in the house that makes sense, that a loved one knows where they are so that they can find them, so that they can help you through that time. That's really important. We're finding more and more problems with that. Also, the other thing on that list, put your iPhone or your Google phone, whatever kind of phone you have, and your computer passwords on that list as well. Because a lot of times, there's apps on your phone that may allow access to your loved ones to get into those accounts a little bit easier when it's appropriate, of course. So leaving your phone password and your computer password somewhere where people can find it. Again, the people who are supposed to have it is an important step as well. So I mean, I know it's a lot of stuff. We're talking about financial decluttering, just like you declutter your closet. You haven't worn something in, 1 or 2 seasons. It's probably time to get rid of it. If you haven't looked at that bill or that statement in a year or two, it's probably time to get rid of it, right? We can all kind of go through that mental exercise, but let's make it a routine. You don't want to say, I'm going to start in 3 months, because that'll never happen. Say, hey, okay, today is, say today's Tuesday. I'm busy all week. So on Saturday, I'm going to spend an hour Saturday morning and an hour Sunday morning, and, an hour on Wednesday of next week. Until I get this done, I'm going to spend those 3 hours every week on this project. I'm going to put some good music on. I'm going to get this shredder going. I'll make some popcorn, make it a little bit fun, so that I get into the mode of taking care of this. You may want to have an accountability buddy. Say like, hey, I'm kind of trying to organize and, clean up my clutter and things like that. And my goal is over the next month to just go through my financial stuff. And these are the days I'm going to do it. So, just reach out to me and let me know whether or not you've done your thing and I've done my thing, so we can hold each other accountable and get it done. It's kind of like when you go to Weight Watchers, you have to weigh in on a Monday. So over the weekend, you're not eating like 3 pieces of cake because you have to weigh in. So having that accountability buddy may help you avoid those 3 pieces of cake, or it could avoid you or help you, I should say, in working on your financial clutter. So develop a strategy. It may not be exactly how I said it, but you know what works for you. And every little bit helps clean up the mess. I will say that the person who has to come and clean up after you afterwards, again, whether or not it's a permanent cleanup or you're just not feeling well and not able to do it yourself for a little time being, the more organized you are, the better off they are in helping you, and kind of less speed bumps along the way. So that's what we have. Our call to action is just take the next step. Do small bites, an hour, Saturday, an hour Sunday, an hour during the week. Commit to the 3 hours a week. Get her done. All right. With that, thank you so much for joining me. Again, I'm Regina McCann HESS, president of Forge Wealth Management. My website is forgewealth.com. You can follow me on Facebook, Instagram, and YouTube at Forge Wealth Management. I am on LinkedIn as Regina McCann HESS. Go make it a great day.
Thank you for joining me for this episode of the Women in Wealth podcast. You can watch the founders video I created for you to learn more about me and how I can guide you towards your financial independence at www.forgewealth.com. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision. Securities are offered through LPL Financial, member FINRA, and SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Forge Wealth Management are separate entities from the LPL Financial. Our show guests and their companies are not affiliated with nor endorsed by LPL Financial, Private Advisor Group, or Forge Wealth Management.